Good afternoon. Welcome to the Weekly Livestock Market Update. I'm Brownfield anchor reporter Meghan Grebner. With us is University of Missouri, Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
Today we're going to talk cattle on feed and talk a little bit about global trade. But to get things started, let's recap what happened this week in the markets.
Yeah, if we start on the cattle side of the markets this week, we saw cash-fed cattle down about 70 cents this week. On the feeder cattle side, cash markets were anywhere from $2 higher to $4 lower this week. On the futures side, the December live cattle futures contract was up about 40 cents this week, while the November feeder cattle futures contract closed down about 35 cents for the week. We did see strength in terms of choice box beef prices for the week, up $3.12, as we saw strength in ribs and loins continue to drive that choice box beef price higher. We have seen an expansion in the choice select spread. It was up nearly $3 this week. On the hog side of the equation, barrow and gilt prices were lower this week, down $2.25 from a week ago, while the lean hog futures contracts were also down. That December contract down a little more than $3 this week. On the pork side, the pork cutout value was actually up 46 cents, as the strength in bellies more than offset what we saw in terms of lower hams and loin prices this week.
We've been talking a little bit the last couple of weeks about hog weight specifically, especially after Hurricane Florence had that shutdown. We saw like a pound jump the first week. We saw another pound jump. We saw almost a 2-pound jump this week as we take a look at hog weights. Combined with the large slaughter runs that we've been seeing, what does this mean for the amount of pork that's entering the market, and where does it go?
Well, I certainly think what we're beginning to see is what we thought all along would be a very large run in terms of pork production here in the latter stages of 2018. And it's hard to find a home for all that pork. Let's hope that we get some good export news. I've heard a little bit recently in terms of some strength in weekly pork exports. But at the end of the day, if we don't use it domestically or push it out on the international marketplace, we know we're going to put it in storage for a period of time. And we just have a lot of production to deal with here, I think, in the very latter part of 2018.
Do we get a little worried, too, as we talk about, we saw Mitch McConnell say this week that the new USMCA deal or that new NAFTA agreement's not going to make it through Congress this year? We haven't seen Mexico lift that 20% tariff. Pork going into China is what, 70%? It's a 70% tariff going on there. How much are we concerned about those markets, and maybe even finding other markets that can make up some of that lost area?
Yeah, so it's certainly important to remind ourselves that, when we talk about a USMCA new agreement, that it takes time from the time we get that agreement in principle between the countries until it's actually in effect. And the fact that Congress may not now take it up for a vote until next session certainly suggests to me that those tariffs probably remain in place for a period of time. We know that there's plenty of positive news for the pork industry out of what we hope will eventually be Mexico lowering tariffs on U.S. pork products, but that probably doesn't help us here towards the end of the year, just as we don't see that new agreement being voted on by all of the different countries. So I think we are going to struggle finding those new markets. And, we can talk China for a period of time. I think we're in for the long haul there, and we'll see tariffs still remain fairly high on China. So we're going to look for some new places. Maybe what we saw with some strength in Korea continues as we move forward, but it's pretty hard to find too many places here in the short run that's going to be overly positive for trade.
We're going to talk a little bit more about global trade. 2019 global trade projections came out this week. Let's talk a little bit about the projections and the numbers that come out, their significance first, and then we can get into some of the positives and negatives out of those numbers.
Yeah, so it is nice that USDA twice a year gives us forward-looking estimates for what's happening in terms of global livestock markets, where we get that information on the crop side on a monthly basis. We only get 2 shots a year from USDA in terms of global livestock markets. And a couple of things, if we start on the beef side for a minute, and I look ahead into 2019 and looking at the data that USDA is projecting for 2019, a few things jump out at me. And number one, think about those countries that might compete with us in terms of beef export markets in 2019. Australia is certainly at the top of that list. USDA is suggesting a greater than 100,000 metric ton decline in Australian beef exports in 2019 as the drought that they've been suffering through in this year. If they return to normal weather, we expect they're probably going to try to build herds a little bit and keep some cattle back that otherwise might have went to the market. So I think there's a lot of strength in terms of what's happening in terms of our competitors in those world markets. If we look at what USDA is projecting, it's actually a 94,000 metric ton decline in overall global beef exports, which I think is helpful when you look at, it wasn't that long ago. Let's take 2014, where they were suggesting a 380,000 metric ton increase. So those markets maybe get a little tighter for us in 2019. And even on the import side, continuing to say another 15,000 metric tons to Japan, another 5,000 metric tons to Korea, Hong Kong, Mexico, all growing in front of us. So that trade balance looks to be fairly good on the beef side for 2019.
We, though, I'm assuming, cannot say the same thing on the pork side of things.
That's exactly right. If you look at what USDA is saying for global pork production in 2019, so 114.5 million metric tons of pork being produced, that's up another about 1.6 million metric tons from the estimate here for 2018. So more pork globally. We're a part of that, as well as China and the EU. And so when you look at what happens, we talk about that growth, but here's where I start to go. Things like African swine fever, where we're still sitting here talking about it. We see more cases coming up. Knowing exactly its impacts, I think, gets pretty hard. But China and the EU matter a lot in terms of global pork supplies. If one or both of those countries were to see a major outbreak of ASF, it's a big change for global pork markets.
But it is because of that uncertainty, does that we see maybe some support on our futures market, but in that same regard, are we also seeing a little bit more cautious moves when we look at the cash side of things?
Yeah, absolutely. I think when you look at markets generally, we're sitting here in the U.S. with fairly large runs of hogs right now. Domestic supply is heavy. And so it's hard when you look at cash markets to get a lot of strength when you're betting on what happens in the future here in terms of African swine fever. I keep reminding folks that the whole effect of African swine fever, it's a 0-1, it's a binary. Either it's going to be a big deal or probably not much of a deal at all, but it won't be halfway in between. We're either going to have a large outbreak that's going to affect markets a lot, or likely keep it pretty much in check. It's none of this halfway. And so I think when you look at cash markets in this country today, we're at may not make a lot of difference, yet you can look at futures markets and they might be crowding more towards the one side. However, again, I don't want to underestimate the seriousness of a large outbreak of ASF in the EU or Europe for that matter. It could just make markets move a lot. Now, I just remind us if the Chinese do have a major outbreak and we talk about a 10 or 20% decline in Chinese pork production, we should not in the U.S. expect to think we're going to get whatever they don't supply domestically. They'll just consume less pork as well in 2019. But it's amazing we're sitting here with such heavy runs and lower prices and concern about more downside risk in our own domestic market. And at the same time, you can look over here and go, African swine fever could just wreak havoc in a very positive way for prices for us in 2019. Now, I remind us, let's hope we don't start talking about ASF here in the United States anytime soon.
And you mentioned that we will likely not get that carryover or that uncertainty in where China would lose their production. Would they just source from other places? Would they go to Europe, go to South America? And would we potentially be able to get into some of those other markets that have pork being displaced because they're dealing with an increase in demand from China?
Yeah, I think you could certainly tell a scenario that the Chinese turn to the EU for additional pork supplies. Even in that case, though, I don't think the Chinese would make up pound for pound what they lost in production in getting trade from the EU. However, for us, we likely don't get a lot of direct benefit out of that Chinese situation, but we're going to pick up those markets that the EU might otherwise leave behind. I just don't see the Chinese being very excited about a lot of U.S. pork, just given the trade battle that we've had here in 2018.
And not paying a 70% premium on it.
Exactly.
Scott, the big news of the week, cattle on feed report. As we take a look at those numbers, there's really a lot to talk about in that because we saw placements down 5%.
That's correct. If you look at what we got out of the report today, cattle placed in September came in at 95.4 relative to a year ago. It's nice to be able to talk about a surprise on the low end for a change in terms of many of these livestock numbers, because the low end of the range was at 96.7. And so I think we are beginning to see some signs of all those calves that we pulled forward earlier in the feed yards. We're now starting to see the hole on the other side. So I think that's all positive news. When you look at cattle on feed as of October 1, we came in at 105.4. So still a lot of feed yards that are full, but that fell outside the low end of the range as well. So midpoint of the pre-report estimate would have been 106.3. So not quite as big an on feed number as of October 1 as we might have thought. So all of that in terms of that cattle on feed report seems to be positive for cattle markets today.
When we dig a little deeper, I think one of the most maybe profound numbers that we see is the percentage of heifers on feed.
Yeah, if you look at what we got out of the report, so roughly 38% of the cattle on feed were heifers. That's the highest level that we've seen since 2012. And I think you and I have had this conversation for almost the entire 2018 that we've had this discussion about, do we see a slowdown in terms of cattle inventory and cattle building or cow building? I think all the data that we have sitting there in front of us says, yes, we are seeing that slowdown. And so all of a sudden you put these cattle pieces together, and what's a better cattle inventory situation that's unfolding as we've gone through 2018, coupled with what might be stronger demand internationally for beef, U.S. beef again in 2019, one I think can get a little more positive. Now I don't want to oversell the positive of 2019, because I will remind us all the time that domestic demand matters in this. And if for some reason we get a hiccup on the domestic side, all bets are off where we go. But we're starting to see some pieces that are moving in the more positive direction in my mind.
And on the domestic side of things, we're still seeing strong jobs reports, low unemployment rate, which I would assume would in turn equal higher consumer confidence, more spending at the supermarket, and splurging a little bit more on those products like beef.
Yeah, absolutely. So I'm certainly a good two-handed economist, but there's a lot of reasons on the one side to be positive about cattle markets as we look into 2019.
Scott, I think that's it for us this week. As we look ahead to next week, we have cold storage and livestock slaughter numbers coming out. On that cold storage side of things, what are we watching? Because those pre-report estimates have some pretty big numbers in cold storage.
Yes, I think a couple of things we're going to be paying attention to. Number one, I think we'll continue to see big supplies of chicken in storage out of the report, starting to get some indication that pork cold storage as well might be up as we're seeing some of these big runs. We might find ourselves backing some of that up into freezer space as well. Those are the couple of things that I think we'll be watching out of that cold storage report.
Well, there'll be plenty for us to talk about next Friday. Scott, have a great weekend. We'll talk to you then.
You do the same, Megan.
To have our weekly livestock market update delivered to your email box every Saturday morning, visit our website, brownfieldagnews.com. Click subscribe. You can also submit questions and comments there as well. And for market updates twice daily, make sure to check out John Perkins' Market Minute. Have a great weekend. I'm Meghan Grebner on Brownfield.